So I believe it was last week, might have been the week before. We talked about some Biden administration's changes, basically making high credit borrowers subsidize lower credit borrowers. We've talked about debt to income. We've talked about seasoning. There's a lot of things that the FHFA and the quote unquote the government are doing in the mortgage market. I thought we should talk to a Convoy Home Loans and see what's going on and how they're helping people move forward. How you guys doing?
Good. How are you?
Good, Dustin. So what are you guys doing in this kind of market? Because it does seem like we're under attack almost. Uh, it just feels that way. I don't know if it's true, but that's how I feel sometimes.
Well, I feel like the entire last 2 years have just been an attack. There's
It
been
really
something
has.
going on. The air is just different, and the attack has been a little brutal. But luckily, when we like obviously if you go to the first channel, we when we started Convoy, we made it specifically like we want to focus on investors. So because of that, it's allowed us to kind of be better than the rest of the market, thankfully, because we can do primary with our eyes closed, but then we can also do investment in the creative way. And that
Right.
creative non-QM way has allowed us to kind of stay above all the stupid regulations that have been happening on the side for
Yeah.
conventional.
Yeah. But being that kind of like when we first started talking, right back doing, both owner rock and then and focusing on the investor really has allowed you to stay above the fray, right? If all you could do was push a button and, approve eligible, that would be not a lot of fun today because the rules seem to be changing all the time. And
Yeah.
yeah, I mean, the seasoning, right? Burr was a big thing, flipping all that stuff, right? The rules changed, right? It went from 6 month seasoning to a year. That's changing people's equation, right? If you plan to pay your hard money or private money for 4 or 5, 6 months, and now you got to hold a year, your project's probably not profitable, right? So, and that's just one example. Then there was a DTI kind of, lift coming in, which I think they just canceled, and it's just a
Yeah.
lot of noise.
No, it's nonstop regulation that we're going to see from, the agencies and I, we'll talk about the products that we have specifically that kind of beat if you're an investor, the 12-month seasoning rule, right? If you're going conventional. I think a lot of the, changes like you alluded to with the DTI, above 40 LLPA that the FHFA is now basically suspending or might just be recalling completely, which I think is going to be the case.
Yeah.
That was released yesterday, right?
Yeah.
Yesterday, yep.
Um, so, I do think there's a chance that the Biden rule, the new Biden rule, even though, people with lower credit scores aren't getting better deals than people with higher credit scores. It's just, it's a little bit of a
The
reduction.
messaging was horrible.
It was a terrible clickbait, but it was great for those people that make money off clickbait, right?
Exactly.
Um, but yeah, we the market's ever changing, and another thing to tie into it, a lot of it I think is coming from the rates in 2020 and 2021. The government agencies are now, I mean, I forget what the number was, but it was up like 20% in terms of the repurchase requests that
Mm.
Fannie and Freddie are now requesting from independent mortgage banks, right? That now all of a sudden, because of the rush in 2020 and 2021 to get loans across the finish line because the volume was so high, there were a lot of errors being made by underwriters, wholesale lenders, retail lenders, whether it be the DTI, no appraisal on the file, maybe the program change and the LTV was too high. But now they're requesting a repurchase, which isn't fun for anybody, especially if you're small and you have to put that on your balance sheet. You may not be able to afford it. Now those IMBs are paying, 80 cents on the dollar to sell it, right? Whereas some of the bigger ones, they'll let it stay on their balance sheet and eventually get it bought back by Fannie and Freddie, a year from now. But those are the trickle down effect of the tightening that we're seeing on all government agency type loans. And then, I'll let John kind of go over why our seasoning options don't have any, sort of, hindrances like, Fannie and Freddie with the 12-month seasoning.
Yeah, so I mean, obviously, and this is kind of standard across the board for most non-QM lenders. It's 6 months, right, on the non-QM side, to do a cash out refi, which a lot of people want to do, especially if they bought on something like a shorter term loan to be able to rehab and then refi out of it, to put less down. That's possible. 6 months. However, what has been really popular for us is 3 month seasoning. or even no seasoning. So what we mean by that is 3 month seasoning, we can do 70% off the ARV, the after repair value, after 3 months with proof that they've done work to the property. So that already in itself, for people that are buying like great deals, right? The ORAC community that's buying amazing deals at a great discount, this allows them to tap into that built-in equity immediately. Especially because it takes 3 months anyways to fix and paint the walls and do whatever, right?
Oh yeah, I mean, yeah, I've done almost 60 flips now. Getting done in less than 3 months is an aberration.
Yeah.
It always takes 3 months.
Yeah, even if it's not like a really bad looking property, right? So that's done. By the time you finish, hey, 2 months in, hey, John or Dustin, let's start the process.
Yeah.
And we can take out 70% of the cash out of the ARV, leave 30% in the property. And the reason why I think that 30% is important and why we're like, even if people want 75 or 80, we say, hey, just take 70, because that 30% gives you a cushion for market, right? Market corrections, market error, whatever. Because even if the market drops 15, 20%, even 25%, you're safe. Right. You got your little piece at 70% loan to value, and then you still have 30% built in. Let the market do whatever it wants to do, and you'll get it back and more later. Right. You can always refi again later, but you can't like go back on equity. Right. So it prevents you from ever being underwater. Right.
Yeah.
And then
I think that's an important piece. Something I'm really starting to position is getting wealthy is 3 steps. I won't go through all 3, but the third one is 10 years. You got to be able to hold the property. You got to be able to hold the asset. And I have seen people over the years over leverage. I call those alligators, and they ultimately lose it. We are going to see people who have Airbnb properties today that overpaid in bad locations lose their properties because they turn into alligators. Yes, you made ungodly amount of money in 2020 and 2021. You're not going to do that in 2023 or 2024. You're going to take money out of your bank account to pay that off. You're going to sell it at a loss. So yeah, I like being conservative. So good idea.
Yeah. So 70%, we have that after 3 months. And then if they will really want to do, like, I really want to tap into the ARV immediately without waiting the 3 months at all, then what we can do is we can do we have a lender that'll do the first bridge loan, whatever, to buy the property with less down, with maybe some rehab financed into it. And then immediately, once they're done, if they have a lot of equity built in, we'll cash them out to 75% of the ARV with the same lender. So we just need to take it back. Be like it's a 2 loans, but it's, step by step. And it's back to back, and they'll allow us to do it. The reason why we don't personally recommend it as much is because the terms are not always as good on the second side than if you had just waited the 3 months to get 70% at, let's say, another lender. Because maybe we're doing within a month, they really want to do a month, cash out, do all that. Then maybe it's like, 7.5. But if you waited 2 extra months, you could have gotten 6.75. So it's like there's a pretty big gap, right? So we've been recommending everyone wait for 3 months, but if you really can't, we have an option to be able to do the AR right away, right? But we have to do the first. We have to do the bridge, and then right behind that we can do the actual refi on the ARV. Yeah. So that's
guys,
providing the market.
Yeah, you're providing a lot of value to the one rental at a time family. Folks, if you are doing projects now, you just want to bounce ideas and run it by, how would they reach out and see which program might make sense for them?
Go to convoyhomeloans.com and let us know you came from ORAC.
Thanks, guys. Appreciate you.
Thank you.